Let me tell you something that most people in this space are completely sleeping on right now. While everyone is panicking, refreshing their portfolios every 20 minutes, and asking why the price isn't doing what they expected, something quiet and massive is being built right underneath their feet. And by the time the majority of people figure it out, the window will already be closing. So if you've been patient, if you've been holding through the noise, stay with me for the next few minutes, because what I'm about to break down could completely reframe how you're thinking about where we are right now. Let's start with the market because we have to address what just happened. The Federal Reserve made their announcement, no rate change, and the market absolutely cratered in response. Within 10 minutes, just 10 minutes, over $1.5 trillion was erased across stocks, precious metals, and crypto. The S&P 500 sold off hard. The Nasdaq dropped. Gold, silver, Bitcoin, everything hit the floor at the same time like someone pulled a trap door. It was brutal to watch in real time. But here's the thing that's driving me a little crazy about the reaction. This was supposed to be priced in. That's what everyone kept saying. The no rate cut scenario is already priced in. And then the second it got confirmed, the market acted like it had never even considered the possibility. That tells you something really important about crowd psychology in these markets. People say things are priced in right up until the moment they have to actually process them emotionally, and then logic goes out the window. Rate cuts? They're not coming anytime soon. If you're still holding out hope that the Fed is going to reverse course and start slashing rates in the next couple of months, I think you need to recalibrate those expectations. That's not the environment we're in right now. Now, layered on top of all of that, you've got the geopolitical situation. A memorandum of understanding was signed to end the US-Iran conflict, and that's genuinely significant. But it's not the finish line. A memorandum is a commitment on paper. The real moment, the one the markets are waiting for, is the in-person signing ceremony, and that's expected to happen Friday. Trump has come out and called it a very strong, very detailed agreement. But he also added the kind of caveat that only someone who's been through high-stakes negotiations would think to add, that with deals, you never truly know until the pen actually hits the paper. So here's what I'm watching for. If that signing happens Friday, I think we see a serious market reaction, not just a little bounce. I'm talking about the kind of move that shifts momentum heading into the weekend. The fear and greed index is still deep in fear territory, and the market has not fully priced in what peace in that region could mean for risk appetite globally. A lot of people have been saying the war is already over, so it doesn't matter, but the price action disagrees. If the recovery hasn't shown up yet, it means the market still wants that final confirmation. Friday could be that moment. Now let's talk about something that matters even more for where crypto is headed long term, because short-term price swings are noise compared to what's developing on the regulatory front right now. There is a window open, and it is closing. Here's the situation. The midterm elections are coming, and if control of the House and Senate flips, the entire conversation around crypto regulation changes overnight. You'd be looking at Elizabeth Warren and Maxine Waters chairing the committees that shape policy in this space. These are not people who have been friendly to the industry, and every single person being considered for a key House committee role on this topic voted against crypto clarity legislation. One voice in the industry said something that stuck with me, that we have until August to get this done. Not the end of the year, August. Because once you get deep into election season, legislative momentum dies. Everyone goes into campaign mode, and the window shuts. There was some pushback from another prominent figure who suggested the industry would be fine without formal regulatory clarity. And look, technically, crypto doesn't disappear without it. The technology keeps running, projects keep building. But here's what does disappear: the institutional wave. The massive capital inflows from pension funds, asset managers, and corporate treasuries. That capital doesn't come flooding in without legal clarity. It can't. These institutions have compliance departments, legal teams, fiduciaries to answer to. They don't move into ambiguous regulatory environments with billions of dollars. And this is where XRP sits in a completely unique position compared to almost anything else in this ecosystem. The XRP ledger was not built for retail speculation. It was engineered from the ground up for institutional scale finance. Cross-border payments, tokenized assets, settlement infrastructure, that's the architecture of the ledger. So when clarity arrives, and it will arrive, the institutions that have been sitting on the sidelines aren't going to flood into meme coins or proof-of-work networks. They're going to look for the infrastructure that was already built to handle what they need, and that's the XRP ledger. Which brings me to something that just happened that I don't think is getting nearly enough attention. The Ripple name has been officially removed from the XRP ledger's core server. The network daemon, the engine running underneath everything, was renamed from Ripple to XRP-LD. Every configuration path, every database directory, every version tag now reflects the XRP ledger identity, not Ripple. This isn't a press release or a marketing rebranding. This is the code itself being rewritten to reflect an independent identity. Why does this matter? Because there has been a massive, persistent confusion problem. Mainstream media still calls XRP Ripple. New investors coming into the space still conflate the XRP ledger with the company, and that confusion has held back the narrative around XRP being an independent, decentralized asset. When CNBC runs a segment and calls it Ripple, a portion of the audience walks away thinking it's just some bank's internal coin. Separating the ledger from the company at the code level is how you start changing that story. And when the mainstream conversation starts saying XRP instead of Ripple, the perception shift that follows could be enormous. Now let's look at the price picture honestly. The 1-week chart for XRP is showing the kind of formation that historically precedes a reversal. A falling wedge pattern developing over weeks typically resolves to the upside. That's just how the structure plays out more often than not. It doesn't mean it happens tomorrow. It doesn't mean the bottom is in this exact second, but it means the setup is there, and the question is, what catalyst breaks it? XRP dominance is also starting to do something interesting. It's beginning to break out of a long-term wedge on its own chart, and that matters because dominance is the signal that tells you XRP is starting to move independently. Once XRP dominance really picks up momentum, the asset can start decoupling from Bitcoin's gravitational pull. It can move on its own story, its own fundamentals, its own catalysts. That's the version of XRP most long-term holders have been waiting for. And here's the thing the bears never want to talk about: exchange balances. Over $31 million worth of XRP was pulled off exchanges in just 72 hours. Wallets are moving their holdings off trading platforms. You don't do that if you're planning to sell. You do that when you're positioning for a long hold, when you believe a major move is ahead and you don't want your coins sitting somewhere they could be sold in a panic moment. The smart money, the wallets that move 8 and 9 figures, they're not buying and then leaving their assets on exchanges. They're accumulating and locking up supply. When supply contracts like this while demand holds steady, and the ETF tracker showed over $10 million in volume on a down day, let that sink in. The math starts to work in one direction. Scarcity builds slowly and then happens fast. That's the environment being constructed right now. Speaking of institutional signals, Matt Damon is speaking at Ripple Swell in October. Not as a celebrity appearance, but in the context of Water.org, a humanitarian organization he co-founded, which is actively leveraging Ripple payments and RLUSD to move money across Asia, Africa, and Latin America. Close to $8 billion mobilized, nearly 90 million lives impacted. When someone at that scale is building on this infrastructure for real-world humanitarian impact, it says something about the credibility and practical utility of what's being built here. And that's really the core of what XRP is. It's easy to get caught up in charts and price targets and dominance ratios, but at the bottom of all of it is a technology that does something genuinely transformative. Right now, a migrant worker sending money from one country back to their family is paying fees that eat into a week's wages and waiting days for it to arrive. XRP reduces that cost to fractions of a cent and settles in seconds. That's not a theoretical use case. That's the actual problem this technology solves for hundreds of millions of people. The price will eventually reflect the utility, but the utility is already real. As for long-range price projections, there are forecasts circulating right now putting XRP somewhere around $1,500 by 2030. Honestly, I think that's conservative. The arguments against these kinds of numbers almost always come back to market cap comparisons. People say XRP can't possibly be worth that because it would require a market cap larger than Bitcoin's. But that framework assumes the total value of the entire crypto market stays roughly where it is today. That's not how markets work when you're talking about tokenization of real-world assets at scale. We are not measuring the same pool of capital in 2030 as we are in 2025. The pool itself grows. The institutional capital that enters this space over the next 4 years dwarfs what's currently in it. Here is where we are right now. We are sitting in the quiet before something very loud. The charts show a potential reversal setup. The regulatory window is open but won't stay open forever. Whales are pulling supply off markets. ETF volume is holding on down days. The XRP ledger is rewriting its identity and code. A peace deal expected Friday could unlock a wave of risk appetite across global markets. Every one of these pieces is moving at the same time. The people asking why isn't XRP moving right now are looking at it from the wrong angle. The price not moving violently in either direction right now is not a sign of weakness. It's compression before expansion. Springs don't make noise while they're being loaded. Stay patient. Stay focused. The fundamentals aren't just intact. They're strengthening week by week. The ones who understand why they're holding will be the ones who don't flinch when volatility hits, and who are still positioned when the move finally comes. If this video gave you a clearer picture of what's actually happening beneath the surface, hit that like button. It genuinely helps more people find this content and stay informed. Subscribe if you haven't yet, because we break this stuff down every single day without the noise and without the hype. Drop a comment below and tell me what you think about the Friday signing. Are you expecting the market to react, or do you think it's already priced in? Let's talk about it. I'll see you in the next one.